Everybody, it's Rob Kientz at 𝙂𝙊𝙇𝙍.com. It is October 18th, 2021, and it is Mining Stock Monday. And as promised, we are going to hunt for some of the best mining stocks in the industry to help you build your portfolio and produce those for you on Mondays. We do that as a value add to the channel because as we've said many times, we need to invest in the resource sector. Those of you that get the weekly updates that are Patreon supporters will note where I predicted that we were going to have some resource issues, especially in the energy space 9 years ago, an article I wrote on Seeking Alpha, and how it helps to keep up with that. And it provides buying opportunities in the resource sector when you know the shortages are coming. Shortage of zinc, a shortage of oil, aluminum, some other things that I talk about in that weekly update for our Patreon supporters. Thank you for being a Patreon supporter, by the way, for those of you that are. That's why we invest in the resource space. And that's why you're bringing Mining Stock Mondays, because if we don't invest in this, we're going to have continued shortages. And we've seen not a strong investment in the commodity space over the last 10 years, especially, 9 years ago when I wrote that article on oil and the pending issues that we were going to have in the amount of oil that we're producing and that we have available and that we have explored for versus what the world was going to demand. And then I also had a very interesting piece on that weekly for our Patreon supporters about zinc. And I'm going to talk to you about a miner that produces zinc here, Altaley. Let's go ahead and get into it. They produce the precious metals as well, but definitely zinc is a part of it. This is Altaley Mining Corporation. They trade on the OTCs under ATLYF. I'll give you the other ticker here in a moment for the Toronto Venture Stock Exchange. But I wanted to look at a chart of the company. As you can see, dating back a year, this is just a year-to-date chart. Year is a nice time frame to look at when you're comparing the quality of an investment. It gives you enough information to see how they've done over the last preceding 12 months. They're trading at 56% up from a year ago, last October. They're beating the general markets. As you can see here, I've got graphed out the general market indices, the Dow Jones, the S&P, the 𝙂𝙊𝙇𝙍, and they're seeing it anywhere from negative or the GDX. So the general mining stocks are down 18.65%. when Altaley is up 56. So you're doing better if you're in Altaley versus the general index of mining stocks, the GDX. But it's also better in the stock markets, which are up anywhere from 23 to 28%. So those of you invested in the broad stock market did okay. If you'd been in Altaley, you would have done a little bit better. And certainly those of you invested in the GDX, you would have done better in Altaley. Now, we did have a fall in price of Altaley, down quite a bit since July and August, but that's because the gold price has changed. We look at a gold price chart here. You see in that July-August timeframe, price fell in gold as well. We were sitting at about in the 1900s, 1914. Now we're down at 1765 in today's trading. So it makes sense that a miner will go down, but Altaley's held up better than the rest of the mining index, as you note here on the GDX chart, and better overall. Even though gold is down, it's done better overall the last year than the general market indices, the general stock market. So Altaley, I think, is a really potentially good stock to get into because it's going to have less downside to it when the rest of the market may be, the gold market may be slightly challenged. And there's several reasons for that. I'm going to get why that's the case in this video and why Altaley could be a really good outperformer in the gold market going forward. I wanted to give a quick update from the CEO, Ralph Shearing. He joined Proactive here back on July 15th to give an update on Q2. This is one of the reasons why Altaley is going to do well. Just listen to what he says, and then we'll talk about the details of that in a moment. Make sure I share sound here. Here we go.
Yeah, net revenue up about 36%. So that's some real positives here for people to take away from, I think.
Yeah, it was $16.6 million in net revenue for the quarter. And, one of the other things that I believe we can still continue to increase is all of the recoveries, base metal and precious metals. We actually have a pilot plant that's finally reached site. It's just being set up. And we'll be conducting 3 months of really hard metallurgical testing to try to improve base metal recoveries and precious metal recoveries.
Yeah. So you feel you got better numbers coming, you feel?
Yeah, this is more of a longer term approach. It'll be, the pilot plant will be tested over the next 3 to 4 months. And we would see from the results of that, implementing any technology required to increase those recoveries late this year, early next year.
Okay, essentially what he's saying is they're increasing recoveries. I think they're targeting increasing gold and silver recoveries 200 and 400% in terms of what they're mining. That's very interesting because they're already making money. The Campo Morado is already making money. They have another project set to come online here in the next 4 months. So it's going to have 2 projects that could be producing in 2022. Stay tuned for that. Whenever you have a mining company that has 2 projects, that are producing, or at least have one producing, another coming online. That's one of the reasons why this stock will be valued higher than the general gold mine index, because investors pay a premium for that. The big investors pay a premium for that. They're really looking for longer term income growth in companies, and that's what they want. But at the same time as that's happening, they're increasing their recovery rates of the metals that they have. Now they're in a polymetallic, you'll see in Campo Morado, it's a polymetallic deposit. So you're getting more than gold and silver out of it, which is a benefit because the world needs what they're producing, and it provides some byproduct credit to the gold mining cost, which you see their AISC is very reasonable. They're all in sustaining cost of the cost of getting the gold out of the ground, but also they're multi-project and they're increasing the recovery rate. So that's the several things that's going to cause Altaley to do better over time. They're going to have better efficiency. They're going to have more product coming online. And that's, I think, why they're performing better than the GDX. Let's go back to the share. I want to go through a few slides on their deck that I found to be interesting here. We'll get over to that slide deck. So the tickers, as I promised you, on the TSX Venture is ATLY, on the OTCQX is ATLYF. And I'm going to go first to slide 5. I think that's the one we want to look at. This is the mine that's, this is 𝙎𝙊𝙇𝙍. This is the one that's going to be coming online. They're already mining from Campo Morado, and it is a positive producing mine. Campo Morado is the 6th largest zinc concentrate producer in Mexico. What did I say about zinc? In the weekly I did for our Patreon supporters, I talked about shortages of zinc, massive shortages of zinc going on in the world economy. Campo Morado provides that to the market. 6th largest zinc concentrate. They also get gold and silver, 2,000 ton per day mining operation. And then they've got coming online 𝙎𝙊𝙇𝙍. So we're actually going to talk about 𝙎𝙊𝙇𝙍 first. So let's get into overall. First, though, they're increasing precious metals production. So they expect growth from 21 to 2022, about 58% growth in their forecasted recovered metal production. That was what the CEO was talking about, and increasing with that new mill, increasing the recovery rates. That's just more money on the bottom line because they're spending the same amount of money getting the rock and processing it out. Now they're saying about getting more of the metals out of it, which just increases their bottom line numbers. So the 21 forecast net revenue by metal was mostly zinc, 60%, 6% gold, 2% lead, 32% silver. The 2022 forecast, based on the way that they're changing the recovery rates and what they're mining and their actual mining schedule, is gold 42%, silver 15%, copper 18%, zinc 22%. So they're going to be getting copper. They're increasing substantially their gold. And remember, zinc is hitting a 14-year high. We need zinc. This is a perfect time to be producing zinc. And that's what Altaley is doing from Campo Morado. Also want to talk about their management team. When you talk about risk factors, and we'll talk about risk and looking at these stocks because there's always risks. The number one thing that I look at is the management team. They have 250 years combined in the mining and capital markets experience. The president, Ralph Shearing, has 35 years experience in mineral exploration and development, 30 years senior management experience with big companies. David Rhodes, chairman director, career in the finance industry. So knowing how to get the money and knowing how to run companies, they get it. But you look at all of these directors and these C-level execs, they have the experience. So this is a team that's done it before. They're doing it now. They're improving the quality, and they're about to bring another mine into production as well. This is the 𝙎𝙊𝙇𝙍 mine. We're going to talk about this before Campo Morado because this is the growth expansion that you could get in the stock if you get into it now, because now's a buying point. Remember, gold price came down. That stock came down a little bit, still doing very well year over year, but it's a price entry point. When you're looking at for price entry points, this is a good one. People have already started. You can see the big money came in here when it was down to this price level, and then it's popped up again. So big money starting to come back in the stock because they realize this is a buying point based on what Altaley is doing. This is 𝙎𝙊𝙇𝙍, and here's a summary of that project. They have probable reserves. Zinc about 2.24%, lead 1.19. Remember, it's polymetallic. Copper 0.35. Grams per ton silver 4180, grams per ton gold 340. The gold by itself at 3.4 grams per ton is enough to profitably mine. All that other stuff is just bonus. The silver, the copper, lead, and zinc is just a bonus. Okay. M&I resources, a lot there as well. They got proven and probable, then M&I and some inferred. Overall, a lot of resources available. 42,000 ounces of gold equivalent per year over the first 5 years, and take all the metals in consideration. 25,000 ounces annual average gold payable, 1,000 tons per day initial production, about a 10-year mine life, and a 20-year mine life based on resources. So reserves is proven and probable. That's 10 years. So this top line right here is where you're going to get 10 years of mining out of this probable reserves right here. This M&I and this inferred is your resources. That's 20 years. So they have tons of mine life here. What they could do is they can increase mill output, or they could just continue to mine it. So if you're looking for a company that's going to be around for a while, this is 𝙭𝙂𝙇, and they want to get that in production here pretty soon. And that's the secondary project. They also have another project we'll get to in a minute in Campo Morado. So the production AIC profile guidance, AIC is to stay under 1,000, which is really good. The average right now for gold miners is about 1,250, but because of all the byproduct credits of having all those other metals, including zinc, which is a 14-year high in price, they're going to be under $1,000. In fact, they're going to start off somewhere around $800 and get up to 1,000 as they go along while producing mostly gold. You can see that. So all those byproduct credits of the silver, the zinc, and the lead, very, very positive for this mine going forward. So you look at it and say, okay, when they bring 𝙭𝙂𝙇 online, they're going to make money. Gold's sitting at 1760s right now. That's $700 profit per ounce. You know, by year 2030, right now up front, it's almost $1,000 because you're at somewhere around 800, 775 to 800 AISC. So a lot of profit built in right up front on the gold price because of all of the byproduct credits and how well the rest of those minerals are doing trading on the market as well. So that is it for 𝙭𝙂𝙇. We're actually going to go to slide 9 and 10, and we'll provide, that's 9 and then 10, mine development, construction, underground development, 90% complete, so on and so forth. We're going to go to Campo Morado because this is the producing one. And this is why you get excited about Altaley now. This is why people were excited about Altaley last year, and they had bid up the price of Altaley last year before 𝙭𝙂𝙇 comes online. There are 7 zones containing volcanogenic massive sulfide mineralization, processing 2,200 tons per day, about 21 million pounds payable. Their M&I resources, 4% zinc, almost 1% lead, 0.8% copper, 123 grams per ton gold and silver, and 1.7 grams per ton gold. So inferred, also a very good number. So they have a 20-year mine life at Campo Morado. So you've got 2 20-year mine lives, Campo Morado and 𝙭𝙂𝙇. 0.77 pound zinc, all-in sustaining costs, which is super cheap, according to zinc being at a 14-year high. 0.48 pound zinc project costs. So Campo Morado, heavy zinc, is going to be very profitable to the company, also getting the precious metal out of that as well. And we want to talk about their increasing revenue. So they're increasing revenues because they're increasing production, but they're increasing recovery rates. So net concentrate revenues from Q3 of 2020 was 6697. 6.6 million. They're expecting Q2 2021, it went up to 18.4. So they tripled their net concentrate revenues in basically less than a year, in 3 quarters, from 2020 to 2021. Process ton per quarter goes up, but it's the revenues are from the actual increase in getting the material out of the ground at a better rate. So concentrate production tons per quarter, you can see here on the chart. So let's summarize this real quick. I'm going to pull you off the share screen for a minute, and let's summarize the value that Altaley brings in Campo Morado and 𝙭𝙂𝙇. Campo Morado, they're already generating cash flow. So you don't have to worry about that. It's generating $2 million in monthly EBITDA, which is earnings before income, depreciation, and taxes. It's a big measure, it's a big measure of profitability in an ongoing operation, which you can compare, to other mining stocks or even to stocks in other sectors. The market cap's only 110 million. It's cheap according to what they're producing in Campo Morado, and they got 𝙭𝙂𝙇 set to come online as well. Only 2.7 enterprise value over to EBITDA, which is cheap for a producing company that has producing profits. They're in process of expanding its output by 150% in the next year. So you're going to get the producing output, and you're going to get higher recovery rates at the same time. They're using state-of-the-art technology to improve the gold and silver and the ore material recovery by 200 and 400% respectively. At 𝙭𝙂𝙇, they're heading for the second mine. And in 4 months, the company will be running a new gold mine. So not very long. And this is where you want to get in. The gold price retracted a little bit. They're about to produce their second mine. It's a nice little way to get in cheap on a potential mining stock if you're looking for it. The addition of 𝙭𝙂𝙇 will double metal sales and EBITDA. The revenue breakdown is 69% gold, 12% solvent and other 19% base metals. 𝙭𝙂𝙇 is forecast to add 30,000 ounces of annual gold production. So it changes Altaley from a base metal miner to a gold focused business. They'll now be gold focused. They have gold now, but with the improvements at 𝙎𝙊𝙇𝙍 and the online production 𝙂𝙊𝙇, they're now going to be valued more as a precious metals miner, which is big when you're talking about getting into a resource stock, because the metals miners, the precious metals miners, lead the investment way in the overall resource sector. And when they start to do better, it's when the rest of the resource sector starts to follow. All-in sustaining cost is $808 an ounce, which is very low cost in 𝙎𝙊𝙇𝙍. And remember, it goes up closer to 1,000, but at 1,700 gold, it doesn't matter. You're still doing very well. And 𝙂𝙊𝙇 as well is going to be 800 to 1,000. Very, very good. A single mine entity to a 4 to 5 mine company, because they also passed 𝙂𝙊𝙇, they want to find additional gold deposits. So they want to expand. They don't want to just have 𝙎𝙊𝙇 and 𝙂𝙊𝙇. They're looking for other projects in Mexico that they want to mine, that they want to produce gold and silver from. Right now, 𝙎𝙊𝙇 is profitable. 𝙂𝙊𝙇 is 4 months away. And I want to get to slide 21. This is upcoming news that you guys should pay attention to. If you ever have traded the mining stocks, news is important. So go down to slide 21 on what management's indicating they're going to have news on. They've already done all these things in Q3. They're doing the pre-feasibility study in Q4 of this year for 𝙂𝙊𝙇, metallurgical test results, engineering work, initial production of 500 tons per day. They want to commence in Q4. 2022, complete expansion of 𝙂𝙊𝙇 to 1,000 tons per day, commercial production update, metallurgical technologies, and increase the production throughput and the recovery rates. So what do we have? We have 𝙎𝙊𝙇 making money. Altaley Mining has done better than the GDX and the general stock market over the last year, even with the pullback in gold. They're about to bring 𝙂𝙊𝙇 online, and it's going to double their gold production and make them a primary gold and silver producer with zinc at a time when zinc is trading at 14-year highs because of why? Supply chain shortages. That zinc and that copper and that lead that they're going to be producing is going to pull down the cost of gold and silver. That's why we've been talking about for an entire year now, the VMS, or the volcanogenic massive sulfide deposits, being so important, the polymetallics. We get base metals and precious metals mixed in. Great management team in 2022 increased profits. And I also very bullish on gold and silver, and continue to be bullish on the base metals because of supply shortages. I think that's the story of Altaley Mining. I gave you the tickers. Risk factors. The risk factors are that maybe the price of zinc comes down a little bit and the byproduct credit is not as good, although the all-in sustaining cost of getting the gold out of the ground is still good even with that. And I don't see that being a big issue. I don't see a lot of risk with regards to the management team. They've done it before. They're producing. They have a lot of experience. They have a good relationship with the local mining authorities. Could a further fall in the gold price affect them? Yeah, but you saw on the chart where Altaley did better than the rest of the gold miners when the gold price fell. So even if gold price falls more, which I don't think it's going to, that's a risk, but I think they have so much room to run on that, they're going to be okay. What if 𝙂𝙊𝙇 doesn't open on time? What if it, a risk that they announce it's going to be producing in Q4 and then in Q2 full production, and Q1 2022 full production, and it doesn't happen? Well, yeah, that's going to push back production some, but 𝙎𝙊𝙇 is producing. They're making money. It's not like a single mine producer, which has a delay in schedule. Would that affect the stock price? It may drift a little bit, but even if they push back production, which there's no reason to say they could, or that they will, it could cause, maybe some pressure on the price, but I don't think that much. What else could be a risk to 𝙂𝙊𝙇? I mean, there's not a whole lot of risk factors there. They've got the proven probable reserves. They got the measured and indicated and inferred resources. They've done all of that work. They're improving their recovery rates. They're already making money at the recovery rates they had before. They're expanding production. They're becoming a gold and silver focused company with all these byproduct credits and these other things. I don't know. There are a whole lot of downsides to it. It's a good price entry point for you guys. Again, if you're interested in investing in the mining stocks, this may be one for you. I bring this to you for free because I advocate for the industry. Because why? Because we're having supply shortages of everything. We need more commodities. The last 10 years have seen this blow up in the tech stocks and things like Bitcoin, all these paper derivative assets. We haven't been investing in real things. We need to invest in real things because we're having shortages. That's why I do the mining stock videos. I brought you a stock here I think could be potentially really good, and all the reasons it could be good. Talked about some of the risks, but they're not really all that different from the general market. And overall, I don't see a lot of downside risk to Altaley or investing in the gold and silver stocks market right now at all. I just don't see a huge risk, but we'll continue to track this one. We're going to stick this in the mining stock tracker for those of you that are helping us on Patreon and supporting us on Patreon at that level. So that will be one that we track over the next year, because I really like this one. I think this one could be, really good price entry point here. And I just don't see a whole lot of downside to it. And I think they've done a great job. So I wanted to bring that to you. That's going to be the end of this video for Mining Stock Mondays. Remember, tomorrow I will be in New Orleans for the New Orleans Investment Conference, talking to more mining companies. We're going to interviews of 𝙂𝙊𝙇𝙍𝙍, Chris Temple. We're going to have our private investor event Wednesday night, 7 p.m. If you guys signed up for that and we chose you as an investor, you'll be coming to that. That'll be a lot of fun. We're going to take a lot of video as much as we can. We're going to put it on the channel afterwards. We're covering that conference for you guys in New Orleans till the end of the week. And then I will be back home, hopefully to stay for the rest of the year to bring you guys more content on goldsilverpros.com. Thank you so much for tuning in. This has been Mining Stock Mondays.